We are doing a Friday family finance, no, finance family, no, family finance Friday. There we go, family finance Friday. Oh my gosh, this is the very first one, and basically, I have put some notes in the note area, um, just to give you some ideas of ways to make this into a family project. And I used 8 weeks as the term. You can make it shorter, well, probably not longer, but shorter if you want to, if you have younger kids or if there's not really a lot of interest. But usually 8 weeks is what it takes to really kind of get an idea of how things would work. You could go up to 12 weeks, but that's completely up to you. And I did make a note that you may want to have some kind of like little prize for the winner at the end of the period. That's completely up to you. Do what works for your family and your budget and all that. So I won't take it too far. So in honor of the anniversary of the stock market crash of 1929, which was yesterday, and if you want more information on that, please watch yesterday's video or take a look at yesterday's post because I put more information in there. I'm going to start this one off, and this was actually one of my favorite projects back in high school. When I was a junior in high school, and I thought everyone did this, so I was very surprised to find out much later in life that I was just very lucky. I had a great teacher apparently. But as part of when we were learning about the stock market and the stock market crash of 1929, our teacher broke us up into groups and gave us each, I think it was $100,000 of Monopoly money, and said, here, choose what stocks you're going to do. We're going to do this. And I can't remember if it was 6 weeks or 8 weeks, but each week our group would get together. We would choose what stocks we were going to buy, if we were going to, buy other ones, sell some, hold them, what we wanted to do. And whichever group at the end of this, I think it was 6 week period, whatever, at the end of the period, the group that had the largest portfolio got the A plus. Second place got the A, B plus, B, etc. I don't think we had very many more than 5 or 6 groups. I don't think anybody really, no one failed. Let's just put it that way. But what I did not realize, and now let's take this back. This is back in the late 80s, and we didn't have the stock tickers and anything like that we have now. You can just go online and find things. We actually had to go through the paper. If you remember, back in the day, you'd open up your paper. There'd be a business section, and you would have like 2 pages of all the stocks and what their price was. And I think it had other information there too. I'm trying to remember now. It's been so long, but I think it maybe had like the 52-week high, the 52-week low, but whatever the current trading price was for that day. And so we would, as a group, we'd all sit around these papers, and we would scroll through and see, and try, and then we had to do research and figure out, because not all the stocks are readily, known by their ticker symbol. And so, so it was a lot of fun. It was a great experience. We learned some basic terminology. And so when I was a little bit older, and actually at the time Morgan was young, she was the first grandchild on both sides of the family. And so she was getting so many presents. She would actually be on Christmas Day, be like, do I have to open her present? I would start her opening gifts like a week before Christmas. And she got so many clothes and toys, and it was just insane. And things that she never wore, never played with. They were very generous, but, it wasn't really helping her. And so I finally was able to talk my family into, they still wanted to buy a lot of presents for her, which is understandable. But I actually talked some of them into giving her money, and some did buy her savings bonds, but other ones would give me money, and I took that money when she was about 5. I had about $500 saved up. And back then we didn't have Robinhood. We didn't have, the online brokers where now you can go on and for, less than $20, you can like get started in the stock market. So I got the $500 together, and I invested it in a spider fund, which is almost like the S&P 500, slightly different, but basically it was something that, followed how the stock market was doing overall. It actually followed, I think, the S&P 500, and had very low fees. And so that way, she was able to have some stocks, and she actually did. By the time she grew up and the custodial account, was turned over to her, Her stocks had gone up, quite a bit. She was doing pretty well there. And at that point, I actually walked her through, and she chose for herself what stocks she wanted. I cashed out this. Actually, I think at some point the Spider Fund did get cashed out. It was purchased several times. It started off as one thing, and over the years it got bought out by different companies. And so we did. So we went ahead and cashed out whatever it was at that time, and then once it was in cash, she was able to choose her companies and get the stocks. And now, she has stock in these companies, and she doesn't have to worry about any fees. She doesn't have to worry about anything. If she wants to add to them, she can. If she wants to cash them out at some point, she can. I hope she does not, but if she wanted to, she could. And she's definitely eligible for the capital gains tax here in the U.S., which is when you've held an investment over a year, you get preferential tax treatment on your earnings. And so it was a good start for her, and so it definitely much more useful than all those outfits and toys and books that she never touched. And so like I said, I don't know if I would have had that same comfort with investing on her behalf, or even later on in my behalf, had I not had that experience back in high school. And so that's why I wanted to start our Family Finance Friday with this project, because it is such a powerful one. And so it is really simple. What you're going to do, and let me see if I can. I don't know if I can screen share from here. I'm used to doing these conversations on Zoom where I can easily screen share. And I do not see where I can do that. Darn it! I really wanted to do a screen. Yeah, in fact, screen share is off. So okay, so I'll just have to talk you through it. And if you have any questions, I always can do a video. I'll do a Zoom video pre-recorded and show you exactly what I'm talking about. But hopefully I've done this enough times that I can just talk you through the process. So what you want to do is the whole family's going to sit down, and you can give them physical Monopoly money, or just kind of give them I guess like almost like a virtual credit card or something. But each person's gonna get the same amount of money. If you want to make it 100,000, you can. If you want to make it 1,000, you can. It doesn't matter. Whatever you want to do. So give each person a set amount of money, and talk a little bit about the stock market, what you're actually doing, that you're actually investing in these companies. You're actually buying a little share of these companies. You may want to talk to them about what kind of investor they are. Are they, and one of the easiest ways to talk about risk tolerance, which is figuring out, what kind of investor you are, is kind of comparing it to when you go to the amusement park. Do you like to ride the roller coaster? Do you like the merry-go-round? Or is something in between, like the tilt-a-whirl, or the what's that other one that kind of spins around and you get knocked over? Anyways, I can't remember. They're all spinning around. So it's kind of that middle of the road. So if you like the roller coaster, you have a higher risk tolerance, and so if your stock is kind of looking like the roller coaster, you're not going to be quite as freaked out. Whereas if you like something more like the merry-go-round, where it's low risk, maybe want something that, a very solid, well-known company, something like your Coca-Cola or your Disney or your, I'm trying to think what else, a lot of the auto dealers, they tend to be, they're well established and they're just kind of set, and their prices don't change a whole lot. And when you look up how the stock is doing, when you look up their individual ticker symbol, you'll easily say, because if it's fairly steady, then it's a low risk. If it's making those big jumps up and down and kind of all over the place, then it's a higher risk. And that can be very helpful, because the last thing you want to do when you're looking at these stocks every week is be panicking and having any kind of stress or anxiety, because you think they're going to, just fall off the map or something. So, which some do. If you get a higher risk company, you can have great reward, but there's also a chance that it could just completely, fall right off the stock market and go to almost zero. So, So that gives you an idea of where you want to start, what kind of companies you want to look at. The second thing you want to do is take a look at companies that you like. So write down a list of companies you really like. So it could be, I know for a lot of like teenage boys, especially, you're talking like Tesla, or you might be talking PlayStation or Microsoft or, different automakers. You may need to actually look up, like, say, for example, you have someone who really likes Maserati, because who doesn't like the little triangle symbol there. If that's the case, you might have to look up, because if you just look up Maserati, they actually do not own themselves. So if you look up who owns Maserati, you will find out that it is actually owned by Fiat Chrysler, who also own Jeep. So if you have somebody who's a big Jeep fan, you're going to want to buy Fiat Chrysler, which who would have thought? If you like Bentley is actually owned by Volkswagen. Volkswagen owns a lot of well-known auto companies like Audi, and gosh, I'm trying to remember who else they own. But and then you actually have also, let me see, I'm going to make a quick note here. Who owns Bentley? Let's see, Volkswagen actually owns Opel, Audi, some car named Seat I've never heard of, Skoda, Porsche, Citroen, and I think is that BMW? Oh my gosh. It doesn't say Bavarian. It says, obviously it's something in German that I just don't recognize. I thought it was Bavarian Motorworks, but it's Bayerische Motorenwerk. So it's Motorworks, but that is not how I would think to put Bavarian. So, but I think that they also own BMW, it looks like. So if you like any of those, you're going to want to invest in Volkswagen. Who knew? And then by the same token, you may have a company that you really like, say like Lucid Air. So if you have somebody who really likes Tesla, they may know who Lucid Motors is. And when you look up who owns Lucid Motors, they actually are not a publicly traded company. So you cannot invest in their stock. I know I've come across this too with people who are into horses. It seems like a lot of the products that you use for your horse that you really, really love are not publicly traded companies. So you may have to do a little bit of research to figure out which company it is that you actually want to buy. So once you have that down, you guys can sit around as a family and talk about, which companies you're looking to buy and why. If you have a younger child, they may want Disney. If you have, someone who really loves their phone, they may want to do Apple or Samsung. Those are some of the big ones. And so sit down and talk about, which ones you like, why you like them, and then figure out what you're going to quote unquote invest in. Jot it down so you can actually make a note of what the so-called purchase is, our virtual purchase. And then next week when you all get together, you can sit down once again, look up how the stocks are doing that you bought, and no one says that you have to invest it all. So you may have someone who wants to invest some and leave some in savings. So they may decide in week 2, to make some more investments with that money, or they may decide to just, that they want to keep it in cash and kind of have it, safe, but actually, as we know with inflation, putting money in a savings account is not going to keep up with inflation, so you're going to fall behind. The money will be worth less and less as time goes on. But that's a good lesson to learn. You never know. And so, in week 2, take a look, see how the stocks are doing, see how everybody's portfolio is, and decide, do you want to buy more? Do you want to sell what you have, whether all or some? Do you want to hold on to it? And that's, completely up to you guys. So make a note of any changes, and then same thing for week 3, go in, see how your current portfolio is doing. And then at the end of the time period, add up your total portfolio, kind of cash it out, sell everything off, cash it out, and, and then see how you finished up. And once again, you can kind of talk about, do you wish you would have sold earlier? Do you wish you would have held on to something? Do you have any regrets about the decisions that you made? And after you go through all of that, like I said, then you can go ahead and if you choose to, it's kind of fun to have some kind of a little reward, whatever it might be. It might be choosing dinner. It might be a little gift card. It may, it could be something, you could give them $20 to actually start investing. And, to that same point, if you are in a position where you really want to, take this to the next level, you could actually do this entire same thing by just opening some custodial accounts, or even a family account, and, making those decisions, and actually using real money and real stocks to purchase things. Now, a few things you're going to want to know as you go into, into doing this is that, kind of what those different things are. So if you like the roller coaster, you're talking the stock market, you're talking, it could be individual stocks, it could be penny stocks, it could be up and coming stocks, it could be, lesser known brand stocks, things like that. Of course, there is always the chance we could have something happen like we had back in March, where overnight everything just went, but then it started coming back up. So, so there's always that possibility that some outside source is going to really affect stock prices, and that's definitely something you might want to talk about as you start this. Ups and downs are just part of it. If you like a little less risk, you could do some index funds. You could do some mutual funds. You could, in some of those mutual funds might have, you could have bonds in there. You could have, certificates of deposit, things like that are lower risk within that investment that you're purchasing through the stock market. And if you are actually using real money in a real brokerage account, you may want to take a look ahead of time and see if they trade those kind of things, because some, especially when it comes to like the free brokerage accounts, they may have less availability. You may not be able to get everything. A lot of times, though, when you're using those brokerage accounts that charge like $6.95 a trade, they tend to have a much wider range and more flexibility. So if you did want to buy like just a partial share, you can. Whereas a lot of times when you're using those free accounts, you have to buy whole shares, and they do have more restrictions on them. So we've already talked about buy, sell, hold, and they're just what they sound like. But there are some other things, especially if you are deciding to use some real money in there. You have puts and calls, so PUTS, a put, or a call. And, that's just basically when you want to buy a stock or sell a stock at a certain price. So you set the price and you say, hey, I don't want to sell this stock for less than this amount of money, or I do not want to buy this stock for more than this amount of money. And usually you can have up to 60 days for that option to be valid. And so if someone wants to buy or sell your share at the, whatever you've set is your limit, it'll go through. And if not, then nothing happens. The thing will reset itself and you just have to re-enter it. But it is a nice way to kind of buy something on sale, or, especially if you have a certain amount of money, and, you need to be a little realistic about it. So take a look at your historical prices, kind of look at the last 3 months or so and see where the price has been. And usually somewhere in that range. Chances are, unless there's, something unforeseen that happens, you're not going to get something on like a super, the super clearance rack. And so, that's definitely a couple things that you want to keep in mind. There is some other terminology that you will want to know. And you can look those up online. If you look up common stock market terminology, you can look up there. I do have a list of it in my effortless investing course, but barring that, you want to, you'll have things like the Dow Jones Industrial Average, which is the leading stock market index for the U.S., and it takes the value of the 30 largest blue chip stocks and follows them. The S&P 500 I've already mentioned, which is kind of the top 500 companies on the stock market. You could have, there are initial public offerings or IPOs. A lot of times, especially when you're first starting out, you want to try and avoid those because they are very volatile. And many times they will get pushed up artificially and then take a big dive. And then they kind of, after a few months, they will actually, kind of average out and kind of be where they need to be. But in the beginning, when they first offer a stock, a lot of times people get excited. And it's like if you've ever been to an auction and people start bidding something up just for the sake, they just want to get it. That kind of happens with IPOs. So just be aware. It's very easy to lose money on an IPO. Um, you know, you, I'm trying to think what else I'm forgetting offhand, but those are really the big ones. So, um, so go ahead and have fun with this. Learn. If you have any questions, please, come back here, ask questions. Um, and also share. Let us know how this goes for you. I'm really excited. And and like I said, if you really need me to go through and kind of walk you through parts of this, like looking up things, doing that Google search, or you know, I would not do a walkthrough video of like how to set up your online brokerage account, only because it's specific to which online brokerage account you choose. But if you had questions, if you're going through it and you have questions about how to answer something or what something means, they have oftentimes help. And if not, please feel free to ask me, and I can talk about those specific questions. I'm more than happy to help you kind of, get your toes wet on this whole thing, because it is a lot of fun and it's a great family activity. Kids actually really like it, because it can be a lot of fun. Like I said, when they're buying their Disney or their Apple or their, whatever it is they really like. And, so it's a little more fun for them, and really brings it to life. So let me know what you thought about this, and I will see you all next week for another Family Finance Friday. Hopefully that'll become easier for me to remember. But anyways, in the meantime, have a great night, and everyone, happy Halloween. Okay. Bye-bye.